Welcome to Ironman Forex TV. Today I just want to give the beginners insight. Most of the people, they are just jumping and start trading on live account without enough knowledge. So I just want to show you and give you a brief description of what is Forex, online Forex trading. When we talk of online Forex trading, we are talking about the exchange of currencies online in the comfort of your home using your laptop, your Android phone, your iOS phone, and other gadgets that can connect you to internet, and that can allow you to use the MetaTrader 4, the MetaTrader 5, and the WebTrader, and some of the trading platforms available online. So today I just want to concentrate on EURUSD. As you can see, it's EURUSD, EURUSD. There are some figures, the L and the H. The L is for the low and the H for the high, meaning to say these figures, they are between 1.10493 and 1.10503. The highest point reached and the lowest point reached. So what does that mean? When we have EURUSD, Euro, EUR, is known as the base currency, and USD is the quotes. So Euro, every base currency is rated as 1. We can say 1 euro is going for 1.1049 or 1.10503, which is almost $1.10 or $1.11. So if someone gives you 1 euro as of Friday 12 o'clock when the market closed, you were supposed to give that person $1.11, meaning to say euro is powerful to USD, because when these are at par, it means when someone gives you 1 euro, you are supposed to give him 1 USD. That is 1:100. But now you are giving, when someone gives you 1 euro, you are giving him more USDs. So that is the issue of the base currency, which is euro, and USD, which is the quotes. And the base currency is rated as 1 against the quotes, which is 1:10493. Let us move on to GBP USD. This is a British pound, the Great Britain pound against United States dollar. When you have guessed the GBP, the Great Britain pound, 1 Great Britain pound is equivalent to 1,31763, which is 1 pound is equivalent to $1.32 of United States dollars. I think now it is making sense. Let us move on to odd USD. 1 odd is equivalent to 0.74, which is 74 cents, meaning to say USD is more powerful compared to Australian dollar. Because if someone gives you 1 Australian dollar, then you give him 74 cents. It means you are paying or you are giving less for one whole number, meaning to say the USD is of more value compared to Australian dollar. So when we are trading is just buying and selling of assets. When you are doing trading online, what does that mean? Let us move on to the graph. As you can see, some of the assets that you are supposed to use, you just click on this graph. The first icon shows the list of the, we are at the bottom. The first icon with arrows facing up and down is for the assets. When you want to add the assets, you can simply click the plus sign at the top right corner, this plus sign, and then you can see the assets. And you can add any asset that you want. To add the asset, you simply click the asset and it goes to the list. Now we want to use USD. Before you open and trade, you go to the chart. You just simply click the asset that you need. For example, here it's USD. We just click and then we can get this list. And we go to the chart. When you go to the chart, you can click everywhere on the chart like this, and this shows the time frames. And I use the M30 graph. When you see it's H4, H1, M30, so different time frames shows different graph outlook. So I use M30. On M30, and we once talked about the issue of the base currency, which is euro, and the quotes, which is USD. Then when euro remains stable, stability means there is no movement either upward or downward, and USD loses value, then you are supposed to place a buy, because the only way this thing can lose value is for these figures to go up. Meaning to say, for €1 here is equivalent to $1.10. And when it moves up, it means €1 at this point will be equivalent to $1.11.3. And it's a greater loss. Meaning to say you are now giving more United States dollars for only €1. But when it goes to, but when USD gains value and euro remain with the same value, it means you are supposed to sell from this point, because this figure is greater than this figure. Meaning to say, for €1 you will be paying less. So when you hear about the sentiment saying USD gains value, it means you are supposed to sell. USD loses, you are supposed to buy. So there are situations which gives you a buy. The base currency, when we say the base currency is at fixed value, the USD can lose value or can gain value. Gaining value meaning to say the €1 is now trading with few dollars. Like you bought at $1.10 and it moves it down to $1.09. It means you are selling and you have a profit of 1 cent, because you bought at $1.10 and you are selling at $1.09. Meaning to say you have a profit of 1 cent. Then when it loses value, you bought at $1.10 and then it moves to $1.11. It means for $1.10 that you have in your hands, you need some more cents for you to be able to buy €1. You bought or you sold your €1 at $1.10. Then the value moves to $1.12. It means you need to look for 2 cents so that you will be able to buy back your €1. So that can give you a signal for buy. That is situation number one. Euro is at constant value. Now we want to put USD at constant value and play with our base currency, which is Euro. Euro can gain due to sentiments or changes in trading activities in Europe, and USD is at fixed value or a constant value. When Euro gains, it means for 1 euro you need more USD. That will be also a buy. When Euro loses value but USD remain constant, it means for 1 euro you need less USD and it becomes a sell. So those are the situations. Euro can lose or can gain, but with a constant quote USD. USD can lose or gain with a constant base current Euro, and that can give you a signal for buy or a sell. I think I tried to make myself clear there. Now we want to open a trade. You can open a trade when you are on this graph through clicking the plus sign at the top right corner, this one. And I want to show you some of the things which are not rarely used by most traders. On market execution, click on market execution. You can see these things: buy limit, sell limit, buy stop, sell stop, buy stop limit, sell stop limit. So I want to talk about buy limit. When we are talking about the limits, like buy limit, your trade is moving down. The graph is moving down. Because when you are buying, the graph must be moving up. But the graph is moving down. And you are anticipating a buy, or that it's a fake movement of the graph to move down. But it will move sharp up. Then you can place a buy limit when the graph is moving down. Side that the graph can move down. When it moves up, it can triggers or opens the trade automatically. As for the sell limit, the graph is moving up, but you are anticipating that when it reaches a certain level, it will fall down. Then you can put or place the sell limit, say that it moves to your position of your sell limit, but it won't open the trade. It then opens the trade when it turns and try to move downwards. So it moves, ignore your sell limit position, and then when it turns to go down, change of graph direction from moving up to down, then it becomes a sell. It triggers automatically because sell, the graph is moving down. And we have the situation of buy stop. Let's say you are not sure about the movement of a graph. If it is going to continue moving up, then you place your pending order at the top of the current quotes. For example, we are at 1.10 and you can place your order at 1.11 above the point where the quotes are. Say that when it reaches that point, maybe you saw a resistance in between 1.10 and 1.11. So when it breaks that resistance, it means it is continuing going up. Then it becomes a buy stop. When it reaches the point of the buy stop, your pending order, it opens automatically. Then we also have sell stop. You are not sure if the graph will continue going down. from 1.10 to 1.09. Then you can place your sell stop at 1.09. When it reaches 1.09, the trade is opened automatically. Even when you are offline, the trade is opened automatically and you can see it in profit or in loss. Thank you very much for this one. And this position, this is where you can set your lot size. You can use N number. You can use N number here. You can set your lot size here. To the right side where there is green line, you can set your take profit. When you are on sale, it means your take profit must be less than less than the number at your entry point. And this is stop loss for sale. The number must be greater than the number at entry point. Entry point is the figure when you say sell or buy. The figure that you can see at the top, return USD versus Euro versus USD dollar, is the entry point number. As for the buy, the take profit point must be greater than the entry point number, and the stop loss must be less than the entry point number. Then you can decide either you want to buy or to sell, and then you can simply click buy by market. But today the market is closed. I think these are other features that you need to know when you want to open a trade. This is what you can do, either to click the plus sign, or you can simply click the USD and then click new order here. When you have a running trade, you can go and modify. You can simply click the running trade and modify. This is a live account. Thank you very much. I think you are enjoying wherever you are. Don't forget, this is the stuff for those who are coming to trade and those who are already trading. Maybe you missed some of this concept. I am going to drop the link to open new accounts on the description section. If you have any problems, don't forget to click the link which directs you to my inbox, WhatsApp inbox, and we can chat and help each other. Don't forget to subscribe to this channel. Click the notification button. Thank you very much. Good day, good time, goodbye.